Good morning. This is Larry Edelson for my Uncommon Wisdom video for Thursday, September 9th. I hope you had a very good Labor Day holiday weekend this past weekend. It's back to some market action now, and the most exciting of all is the gold market. So let's go right to that chart, which I have in front of me. Here you see that right after Labor Day, gold sprang nicely higher. We're just a few dollars away now from an all-time record high in gold. And certainly you can see from the bottom part of this chart here, the momentum in gold is looking very, very good to the upside. As I indicated in my past couple of videos, the autumn season, September and October and to November in particular, is typically a very strong seasonal demand period for gold. We have several celebration holidays across the globe, especially in the Indian wedding season, and that is typically a very high demand period for gold. And with all the uncertainty in the economy, we're certainly seeing additional demand come into play, especially as investors get back from the summer doldrums and back into the school period. Kids are off to school, and investors are looking towards the end of the year, starting to prepare and position their portfolios appropriately. Savvy money is definitely accumulating gold here. I'm looking now for gold to probably pull back for a day or two, but then charge to new record highs. How high gold can go in this move is difficult to say, but I would not be surprised at least to see 1,300 as the next step, then a pullback, then 1,350, 1,400, and on to $1,500, which is quite possible before the end of the year. You should be long several core gold type recommendations that I've put out in my columns and in my Real Wealth report, and doing very nicely indeed in those positions. Let's take a look now at the dollar, another key market. The dollar index is rallying today in after Labor Day type trading action here. We're catching a bid in the dollar. That's because the euro is looking terrible, and there's a lot of concerns about Europe's sovereign debt crisis coming back into play. Do not be concerned if we see the dollar move higher, basis the dollar index up to say 85, as you can see here on this chart here. Let me pull it up for you a little bit. The dollar index could quite easily move up to the 85 level here. That does not mean a stronger dollar would kick gold down. As we've seen numerous times over the past year, as the euro falls, investors in Europe are scrambling for gold. So it's very, very possible we could continue to see gold rally very strongly, even to new record highs, as the dollar strengthens in the short term. Long term, the dollar remains in a long-term bear market. Let's now turn our attention to the Dow. In my last video update, I told you the Dow would encounter resistance right around 10.5. Indeed, that is the case here. It looks like it's forming a short-term bear market rally top here, and we should see a move back down to under 10,000 in the weeks ahead, to 9,000, which is my target level, and possibly down to 8,700. One thing I would like to point out here is the Dow, as you can tell, is looking kind of resilient. It doesn't want to go down very much. It's tending to rally on any type of good news and even on bad news, and it's struggled to the downside. It's not, falling completely out of bed in any type of crash scenario. We may yet see that. We may see a sharp move down to the 9,000 level, but I do want to indicate to you that the resilience in the Dow is a sign longer term of what I've been saying, that longer term asset inflation, or reinflation I should say, is going to happen as the Fed continues to print money like crazy and unveils additional options that it has at its disposal as the economy continues to slide. There are several things the Federal Reserve can do in addition to printing money, so they're not out of bullets yet. For example, they could cut the reserve requirement at banks, lowering it down a couple of percentage points or so, freeing up more money for the economy. They could also even penalize banks for not lending out to the economy. Right now, banks are not lending very aggressively at all to the economy, and they're parking their excess funds for safety with the Federal Reserve and earning 1/4% or even more on those excess reserves parked at the Federal Reserve. Well, the Federal Reserve could turn around and say, hey, you continue to park your excess reserves with us, and we're going to charge you a penalty. That would swing the banks back into a lending position quite easily. So there are at least 3 strategies the Federal Reserve has going forward, and even a couple of more strategies that they can pull out of their shirt sleeves, and I fully expect they will do that. So let's keep an eye on these markets. Another factor to keep an eye on is, of course, the upcoming midterm elections. There's clearly no doubt, based on the polls right now, that Republicans and the Tea Party are going to make some substantial inroads into the Democratic Party and into Congress. It's hard to say how that will unfold as far as an impact on the markets right now. We've got a couple of months to go, but whatever happens in those midterm elections, it's not going to matter in the scheme of things on an intermediate term or longer term basis. We're going to continue to see the economy get hollowed out. We're going to continue to see the economy weaken. We're going to continue to see the Federal Reserve in Washington fight this double-dip recession, or actually depression as I call it, tooth and nail, and we're going to see a bigger and bigger divide occur between financial markets and the real economy. So I do want you to keep a flexible, open mind here, because a spiraling lower economy does not necessarily mean that financial markets are going to collapse and crash like crazy. We're going to see some markets crash. We're going to see other markets, mainly tangible assets, gold and natural resources, go through the roof. So this is going to be a tricky time, but it's also going to be a very exciting time, loaded with profit potential. Till next week's video, this is Larry Edelson. Please stay tuned to my columns and my other writings. I repeat, lots of profit opportunities coming up.